2,711 Miami condos just failed to sell in 1 month. And while everybody's focused on the spring bounce in single-family homes, the condo market in Miami-Dade just told us something completely different, and you need to see this. What's up, everybody? Jake Fletcher here, Miami real estate advisor and team lead at the Fletcher Group with eXp Realty. And every single month, I painstakingly pull all of the freshest MLS data the second that it's available. And as soon as I'm able to get these videos out for you guys, no spin, no fluff, and I break down exactly what's happening in the South Florida real estate market so that you can make confident decisions and make the best decision for yourself and for your family. And today we're getting into the March 2026 numbers for Miami-Dade condos, townhomes, and villas. And I'll tell you guys up front, this is a complicated report, okay? There's one really surprising data point that looks like good news on the surface, and we will get to that, but under the hood, this market is still telling sellers a very specific message, and smart buyers, they are positioned exactly where they need to be. So if you want to talk strategy one-on-one, the link is in the description down below. So let's get into the numbers, and let's start with pipeline. What's coming into the market and what's actually closing. Sales jumped to 1,137 condos closed in March. That's up 22.1% from 931 sales in February. Solid month-over-month growth, and spring buyers are showing up right now. So here's the year-over-year context. Last March, we closed 1,130, so we're essentially flat compared to a year ago. Translation is that spring is delivering some lift, but not the kind of breakout that we saw on the single family home side of things this month, where sales jumped 42% in 1 month and posted 9.2% year-over-year gains. So condos are different, all right? Demand is here, but it's not surging. Now, let's look at the new listings next. 2,682 new condos hit the market in March, up just slightly from 2,617 in February, about 2.5%. But year over year, that's down 512 listings or 16.0% from last March's 3,194. And look at this 12-month chart here. We're well below where we were a year ago for new listings every single month. Sellers are bringing fewer condos to market than they were 12 months back. Now, you might think that fewer new listings would help to tighten supply, and it is helping a little bit, but here's the problem. Even with 16% less new supply hitting the market year over year, we're still drowning in inventory right now with Miami condos, which tells you that the demand side of things is just, it's not strong enough to absorb what's already sitting on the market. Active listings and months of inventory is up next, and this is the segment that defines the entire condo story right now. Active supply came in at 13,486 condos, townhomes, and villas in March, down from 13,566 in February, a 0.6% reduction month over month, and year over year we're down 7.9% from last March's 14,640. So inventory is technically improving. It's slowly grinding lower, but look at this 5-year chart, and I want you to see the scale of where we are. Back in mid-2022, active condo listings in Miami-Dade were around 6,000. Today, we're at 13,486. So we're still more than double from the 2022 inventory. And, that brings us to months of inventory coming up next. March came in at 12 months of inventory. Now, in fairness, that is a meaningful improvement, down from 15 months of inventory in February and down from 17 in January. Down 1 month from 13 last March, but let me put 12 months of inventory into perspective for you. 1 to 3 months is a seller's market, 4 to 6 is a balanced market, and anything above 6 is a buyer's market. So we're at 12 months, which is double the threshold for a buyer's market, and we've been in double-digit inventory territory for over 18 consecutive months now. This is structural. The condo market in Miami-Dade is not having a temporary moment of weakness. It's working through years of overbuilding, rising HOA assessments, and after the Surfside reforms, elevated insurance costs, and buyer caution about older buildings. So all of that takes time to clear, and not to mention, a lot of those buildings are also seeing huge special assessments. So we're in the middle of sort of clearing this inventory, and if you're a buyer in this segment, segment, you have serious, real leverage that you really may never see again once we're done going through this cycle. And if you're a seller, you're competing against 13,500 other listings. So pricing strategy is everything. Now we get to what I'm calling next, the failure versus flex segment. And that segment is the heart of the story. Expired listings came in at 2,711 in March, up 400 listings from February's 2,311. That's a 17.3% jump in just 1 month. And year over year, we're up 8.4% from last March's 2,502. So 2,711 Miami condos failed to sell in March. Let that sink in for a second. Excluding December, which always has the highest number of expireds because of seasonal contract expirations, March 2026 is the second highest expired listing month that we've seen in the past year. And it almost matches the spike on the single family side of things this month, where we saw an 18% jump in expireds. So both segments saw a wave of failed listings simultaneously. That's not random. This is the market correcting overpriced inventory at scale. Now let's look at the closed price to original price ratio, which is the other side of the failure versus flex. Obviously, expireds are failures, and the closed price to original price ratio is the flex. So March came in at 93.1, down from 93.2 in February, slightly down month over month, and year over year we're down from 94.0 last March. So close to a full point lower year over year. What that's telling us is that the modest gains sellers were starting to recover from in January through February are now backtracking. Sellers are conceding more off of their asking price again, and here's the playbook for condo sellers in Miami-Dade right now. Do not go on a fishing expedition. Don't list at the price that you wish you could get. Don't list at what your neighbor got 2 years ago. Don't list at, some magical price that a third-party website tells you is the value of your home, okay? Work with somebody who knows the market and price into the market. Work with somebody who studies the data weekly and even daily like myself, someone who knows the comps of your specific building cold and understands the marketing required to actually move a unit in a market with almost 13,500 competitors, okay? 2,711 sellers learned that lesson the hard way last month, okay? So don't be the next one. The bottom line is up next, which is days on market and median price. Median cumulative days on market came in at 103 days, down from 109 days the month before, which is a slight improvement, but up significantly from 81 days last March. That's 22 days slower year over year. So here's the context that really matters. We've been in triple digit days on market every single month so far in 2026. Compare that to all of 2025, where there was only 1 month that broke into triple digits. So the condo market is moving much slower this year than it was last year, and buyers have time. Buyers have options. Buyers are using both their time and their options to leverage in negotiations right now. And, that's very important if you're a buyer in this market. And let me tell you guys, I've been negotiating the heck out of people right now. So, keep that in mind if you're a buyer, and definitely keep that in mind as well, again, if you're a seller. Now, up next is median price. And this is the data point that if you only really read the headline, it would surprise you. March came in at $447,500, and that's up $42,500 from February, which sounds crazy. A 10.5% jump in a single month, and up about $10,000 year over year for a 2.3% gain from last March. So on the surface, that sounds bullish. So what's going on, okay? Two things. First, in a low volume month, and 1,137 sales is still relatively low, the median is sensitive to mix shifts, okay? If a bunch more luxury condos close this month versus February, then that moves the median significantly without telling you anything about the broader market direction, okay? So that's the unit mix, right? Now, second is, if you zoom out on this 5-year chart, we've been bouncing in this $400,000 to $450,000 range since the end of 2022. And that's 3.5 years of price stability. We've tested $450,000 multiple times, and March of 2024, February of 2025, and the market just keeps rejecting that 450 point, okay? But we've also tested below $400,000 400,000. In November of 2025, for instance, it hit 393,000, and the market keeps catching it. So 447,500 isn't a breakout number of new appreciation. It's a bounce inside that same trading range that we've been in for a few years now, honestly. But here's the important takeaway. Even with 12 months of inventory, 103 days on market, and 2,711 expireds in a single month, prices are not collapsing. The floor under condo prices is real, even with all this pain, and that floor is at about $400,000, okay? So here's the honest summary of Miami's condo market right now. Number one, demand is showing up, but quietly. 1,137 closings, up 22% in a month, but flat year over year. Spring is delivering modest lift, not the breakout we saw on the single family side, but we will be keeping an eye on that in the next month's data, so hit the subscribe button. Number two, supply is grinding lower, but very slowly. 13,486 active listings, down 7.9% from last year. It's improving, but at this pace, it would take years for inventory to return to anything resembling balanced. Number three, the expired listing story is the warning. 2,711 listings failed to sell last month. That's the second highest non-December reading in 12 months, combined with the close price to original price ratio dropping back to 93.1%, and the message is unmistakable. Overpriced condos are getting filtered out by the market. And number four, prices are holding the floor. $447,500 as a median is a technical bounce inside of a multi-year trading range. And we've tested this 450 and gotten rejected multiple times. We've tested sub 400 and gotten caught multiple times. So the 400 to 450 range is the new normal as of now. And it's been that new normal for a while, right? For years, as we said, for about 3.5 years. So my read on this market right now is if you are a buyer, you're still in the strongest negotiating position that we've seen in this segment for years, okay? Especially compared to the pandemic era. Now, 12 months of inventory, 103 days on market. Sellers are conceding nearly 7 points off of asking price on average. This is a buyer's market in every single meaningful sense. Just be smart about what buildings that you're looking at. Older inventory with looming assessments is a different value proposition than newer construction with stable HOAs. If you're a seller, please, for the love of God, do not list without a real pricing strategy backed by real data, okay? And Zillow is not data. There is a buyer for your unit. There's a price that will get it sold, but there's also a price that will get you added to that 2,712 expireds in April. So don't be that, all right? If you want to talk through your specific situation, your building, your timeline, your financial picture, the link to book a strategy call with me is in the description down below. I work personally with every single client and I respond to every single message. So subscribe, hit the like button, hit the bell, to make sure that you get the next data drop the moment that it's available right here on my YouTube channel. Feel free to follow me on Instagram. All that stuff is down below. And in a market that's this complex, being prepared beats waiting for certainty, okay? Jake Fletcher here with the Fletcher Group at eXp Realty, and I'll see you on the next one. Peace.